Yep. Okay, so that's good. All right. JT is back in KL. All right. So what we're gonna do, right? Is he recorded the video. It's about 20 minutes long. So what we're gonna do is we're gonna play his video, right? His recording for about 20 minutes. But before that, I want to bring you to is later at 8:30. Okay, we have two important information events from US, basically called PCE Price Index and personal spending. And what we saw is dollar yen, right, which is today intraday level, is actually hit the 105.5 already. Right, so depending on how this 8:30 news is gonna release later, I'll probably trade it accordingly if this comes in negative. All right, but of course, if this news comes in positive, I won't be entering on this dollar yen trade. Okay, so we'll be able to look at the market news later on because JT's video is about 20 minutes. All right, so that will end about 8:20. Then we still have about 10 minutes to talk about this dollar yen trade itself. Okay, so I'll just JT's video and then we'll watch it. Okay, Warner.
I hope you have a good welcome to this week's Monday Live webinar, where we'll be talking about directional bias and some trade management for some key currencies that are interesting for this week. We'll be doing it based on FSI, which is the fundamental strength index, plus a bit of analysis on the COT. Okay, so for this week's Monday Live webinar, I'll be talking about three key currencies, which is the US dollar, the Japanese yen, as well as the euro. And this is last week FSI, and we can see that there were two currencies which were still on the red, which is the Aussie dollar and the Japanese yen. They were still under the zero mark, which means that this currency, as opposed to 52 weeks ago, it's still weaker, which means 1 year from 1 year ago at this time, this currency was actually stronger. Right, so as opposed to the other six currencies, the Kiwi, the Canadian, the Chinese economy, these economies were actually performing better than a year ago. And these are all data that was taken from Forex Factory, from Forex Street. And the indicators, the economic indicators were all aggregated to give me an idea of how well this economy has performed over the years. So we can all now see that there is a relationship between these economies and the currencies that underlying this economy. We all know that US dollar has been strengthening, and we can see that the US dollar has actually been strengthening for the past few months, and we can see how this plays out later in the webinar. Okay, so this is each week's FSI, and you can see that compared to last week's FSI, there's a few changes, notable changes. Number one is that there is this Japanese yen that has now crossed the zero mark. From contraction to expansion, it has now become an economy that performed better than its 52 weeks ago. Okay? And we see also that the US dollar has also strengthened by 10% over 1 week period, where all the economic indicators pointing towards US dollar being recovering. And of course, we also have the euro, which has improved significantly from last week's this week's 50%. So these three currencies actually improved by plenty over the 1 week, and which is why I want to talk about these three currencies today, right? So these are currencies that I'm actually watching. Well, from the other currencies point of view, we're actually seeing that there's not much changes. Very insignificant from Aussie is still roughly around 22% mark. It's still around the 22% mark for this. Canadian improved slightly from 3 to 4%, still insignificant. Chinese improved a little bit, yes, and pound also improved a bit from 3% to 6%. interesting one is still the three here, Japanese yen, the US dollar, as well as the euro. From COT point of view, let's take a look at these two currencies, the euro as well as the Japanese. We actually have a bit of misalignment for the euro, which I'll talk a bit more just later. We see that there's actually an increase in short or a decrease in long for euro, which gives it a overall net short position. For the yen, it actually went down. Its overall long position has actually gone down since a few weeks ago, but from last week, it actually added a few more long contracts. So these are two key COTs I'm looking at today, and these are the results of the directional bias for the for these three currencies. For the euro, because I mentioned that there's a misalignment there, I'm neutral to slightly bullish. For US dollar, I'm bullish, and the yen, I am bullish for the first time since 20 days. Right, so let's talk about the euro first. The FSI has improved by a large margin. We saw just how it went from 33% last week to 50% this week. And I'm not surprised because there are a lot of data for the individual countries in the Eurozone that actually improved for quite a bit. FSI improved a great deal, which means yield data are very encouraging. And this actually has been mentioned during Draghi's news conference. But the question is, the million-dollar question is, will he taper his QE? Is the QE overkilling? And he has spent a large deal of time defending his negative rates and easy money policies. But is it time to stop right now? So that's the million-dollar question. If it's stopping, well, we all know that the euro is going to strengthen. But if it's not, and if it's going to extend the QE and the negative rates policy, then we will see euro further weakening against the other countries. Right? So from COT's point of view, we see that the COT has added a huge number of short contracts over the last week. That's almost 30,000, and that's 30,000 2 weeks consecutively. We also see that there's a lot of longs added, slightly more than last week, but that doesn't stop it from being overall net short position and further net shorts, which means its bearish momentum retained. But this is still not the most bearish we have seen. Okay, right now, from COT's index point of view, it's only around 35 points, which means it could go even further, let's say 200,000 or 250,000 negative net short. But this does mean that there is no alignment between the fundamental analysis as well as market sentiment. And because of this reason, there is no alignment. We are far from seeing a strong euro despite the strong FSI that has been registered. So, well, the idea here is that we still want to trade the euro, and the euro to us is a pretty interesting one because from technical analysis point of view, there are multiple divergences that we actually encountered over a few pairs, such as the euro USD, the euro Aussie, and the euro yen. But we still have to be mindful with the fact that the sentiment isn't exactly giving us the best case scenario here. So how do we trade the euro this week? We want to be mindful that there are a lot of minor data out there, especially when you talk about these individual countries that give us all the smaller euro data. Let's just take a look at how it looks like. I'm taking in also the orange and the yellow data, which means they are non-impactful data. Now, the euro just came out with 1.4, which is lousy, and we see that there are a few others which are the more important ones, like the CPI flash estimate, as well as the flash GDP quarter and quarter. These are the two key ones. And subsequently, we have all these individual countries' PMIs, and we have the total PMI, final service PMI. All these do affect, but not on a larger not as impactful as this tool here today, which will be coming out at 6 p.m. Currently, it's 5:30 p.m. at my time, and we will be watching this news very carefully. If it does come out, I will be taking out my euro longs because I am not optimistic about a long-term long or mid-term long for the euro. So the risk to euro long trade, as mentioned, that strength in USD will also weaken the euro USD. This will weaken euro across. And secondly, if there are any rumors from ECB extending easy money and negative rates, the policies, it will also push the euro lower. They will add a lot of selling pressures to this currency itself. Okay, as also I mentioned just now, if the data that comes out for this week are not good, which means they are all negative data, they can also easily push the euro into the bearish momentum, continuing from 2 weeks ago. Now, let's talk about the US dollar. The US dollar has actually improved over the last few weeks. If you take a look here, there actually has been a stagnating. It goes down, it comes back up, it goes down, it comes back up again, goes down, comes back up, and it actually tested a level about 22 to 23% for about 4 to 5 weeks, right? So for 4 to 5 weeks, ever since there was a ever since Brexit, and you will see that this FSI has actually improved over 1 week last week. Right, so the boost in US dollar is registered in FSI, and this is likely to be good news for this week when there is FOMC, which means I'll be looking very actively for a very good long USD trade to anticipate this week's FOMC, where if there is a bullish tone or a hawkish tone coming from the Feds again, I would be looking at pretty good US long results and profits. Right, so the US dollar, in terms of sentiment, we are still looking at the DXY to gauge sentiment. There is a bullish momentum on the DXY. This means there is more upside to US dollar. As I mentioned a few weeks ago, that they are actually testing the 100 level for the DXY, and currently is already at around 98.5. If you take a look at live chart, we can see this long trend, this uptrend, holding on pretty nicely. Okay. You can see that DXY has long trend, higher highs and high lows, and it's holding on pretty nicely. Of course, there is this here that we see that this downtrend here has actually exceeded the previous low, which is a cause of concern, a slight concern here. But I'm still pretty bullish on this particular currency, that this index here, that it would eventually test the 100 mark. And this 100 mark has been tested a few times. Yes, it is a very strong major resistance, but this means also that there is further upside to this particular index. What does this mean? For currency trading, it actually means that the US dollar has more upside to run. And if there is more upside to run on this US dollar, and there's FOMC coming up on this week, and also so many different USD data coming out, I'm actually looking at pretty high probability setups here for a lot of USD trades. Look at the big ones. There's ISM Manufacturing PMI, there's ADP NFP, there's FOMC on Thursday, which is our 2 a.m. morning. And there's also non-manufacturing PMI. All this could give the US dollar a boost. Of course, the other way can also happen, which is bad data. So I'll be very mindful of that. The idea is that I have a premium here, which is long the US dollar. I also want to manage trades properly. So in this week, for let's say today or tomorrow, I'll be getting into a good long position for my US dollar, for example, the US dollar yen, and I'll be protecting myself from this data to manage my trades. For example, if there is a bad data that comes out, I will be shifting my SL to keep my losses smaller and tighter. And I also would leave my longs, let's say if the good data comes out. But if the market doesn't react to the good news, sometimes it might go the other way. I will not do anything about it. I will just keep it there. Why? Because I'm still confident, very convicted that the US dollar will further go up, and the small little drop from the market might just be a profit taking, and hence it retraced a little bit. And finally, because I have a long USD dollar premise, I will never short the US dollar, even if it's in a small time frame. Let's say if you are doing scalping or if you're doing day trading, I might not want to get into a short US dollar trade because it will be a low probability trade. Right? So the risk to a US long trade is, of course, the US elections. Last week, we have a knee-jerk reaction from the news that Hillary is being investigated by the FBI's again for whatever email reasons. So all these can actually trigger a risk of event. And we saw that actually happened to the US dollar yen. It was actually testing the 105.5 level pretty nicely when that news happened at around 2 a.m. And it just went down by, if I'm not wrong, about 100 pips all the way to about 104.4. So there's more than 100 pips. So you can see that how big this risk of events can actually trigger, but not too big if you look at it from day chart or H4 chart point of view. You can see that this uptrend is still holding on, and the major support here at 104.5 still holds. And we would see further upside to this if the data this week coming from all these PMIs and the employment data and FOMC is going to give US dollar a boost. And also that data, as mentioned already, just a reminder here, be sure to check the data. When you check the data, check the actual minus the previous instead of the actual minus the forecast, because the forecast can be wrong. The forecasts are dubious at times, but the previous is never wrong. It's what we actually had last month. So if you want to look at the most convincing data, you actually have to see whether there's an improvement from today's data, from today's number versus last month's number. That will give you a better idea instead of looking at the actual balance forecast. So for yen, it has actually finally broke the zero, and I'm sorry, this is a wrong one. Let me just show you the correct one here. So this is our FX Edge data. So what we have is a compilation of this week's economic tracer, as well as the fundamental bias for, sorry, the directional bias for all these currencies here. And I'm actually looking for yen. Where's my yen? There you go. And take a look at that. There's actually a spike at the end. And we are actually looking at improving the economy. Right, so let's just take a quick look at that. And we will actually realize that yen has always been in the red for the last 1 year, which means for the last 52 weeks, it has actually performed lousier than its economy a year ago. And last week, I actually mentioned that FSR might be green by the end year. I actually was wrong. Apparently, it's much faster than anticipated. Last week's Japanese data, apart from the BOJ core CPI, actually missed its expectation and missed its previous. The rest of the data were actually green. If I bring you to that statement there, you can just take a look. For Japanese data last week, we are actually looking at pretty good results here. All this contributed to the fact that Japanese FSI has actually breached the zero and now is in expansion mode. How long will this last? We still have to say, we still have to tell in the next few weeks, but today we're actually looking at good news for yen. Furthermore, for TLP, from TLP point of view, we're actually looking at smaller shorts, which means there are about 185 short contracts closed, and there are close to 8,000 long contracts at the futures market. So Japanese yen temporarily reverses closings of longs last week, adding long and closing a little bit of shorts. As mentioned just now at the first of this video, we actually saw a lower net positive reaction following this week. But this week, they actually reversed that. So we can actually see that the COT for yen has actually improved. So this long here shows that there is a bullish momentum, and it is actually adding to that bullish momentum. There's alignment between the FA and the AMS, the fundamental analysis, market sentiment. But I'm also mindful that the fact that yen seldom follows fundamental analysis. The knee-jerk reaction last week is caused by fear. Such a huge movement in the yen market is often caused by some external factor, such as risk events, like Hillary versus FBI. Such things actually move the yen more so than anything else. So, long yen is a little bit key. How do we trade yen then? Yen can be traded with good technical analysis entries such as divergence or trend following, but it must be managed properly with a lot of sentiment analysis, such as the US dollar yen. So what do I mean by that? When good US data strengthens this currency pair, the US dollar yen, it would also weaken yen across board, which means good US data might also affect any of your yen currency pairs like Euro yen or Z yen, Kiwi yen. That being said, also, if you want to long the yen, you must also be mindful that a lot of these yen currency pairs are also on this is Aussie yen, this is also yen currency pair, and we see that it's also on a technical bearish bullish move. If you look at another currency pair, which is, let's say, the Euro yen, we can also see that there is a uptrend from H4 point of view. Right, so this is more or less a V shape here. Not exactly an uptrend, but closer to it, you can actually see that there is a uptrend here. So this uptrend may persist, and given that it may persist, your long yen may be at a disadvantage, because from a technical analysis point of view, the science behind technical analysis is that whenever there is a trend forming, the momentum follows through, which means the trend tends to persist. Okay, so these are all risks to a long yen trade. The risk on sentiment will also continue to weaken the yen. As mentioned, watch the US dollar yen closely. I'm not showing the chart, but the US dollar yen, I think we all know, is still on the up. And given that this is on an uptrend, you might find it difficult to short the yen since you are going counter trend. Okay, be mindful of all this. Even though FSI and sentiment shows us that there is a very positive vibe around the yen long trade, you still have to be mindful with the technical analysis. At the end of the day, the ones that give you the best entry, the best outcome are all technical, fundamental, and as well as sentiment analysis alignments. These are the ones who give you the best results. So the conclusion today is that yes, I talk about three currency pairs that has improving FSI, and I talk about three currency pairs has a bullish bias, so to say. We have a euro, we have US dollar, and a yen. But we see that there are actually differing levels of varying levels of cases here, where the euro here, this is the euro. I'm talking about long, bullish, yes, but there's no strong case here where the COD is against what I'm actually saying. Okay, and for the yen, I have strong case, actually, no, that's all right there. And we know strong case as well, because the analysis is still giving me what I'd say a bearish, sorry, a bullish momentum. What I actually have here is a strong case for the US dollar, which means if I were to pick a currency to form my directional bias, let's say if I were to pick Aussie dollar, since it is considered fundamentally the weakest now, I might want to pick the Aussie US dollar instead of the euro or the Aussie yen, because the US dollar Aussie is going to give me the best directional bias, the strongest case for a short versus a long. So how would it play out? If I were to take a look at the Aussie US dollar, it might just follow through this particular trend right here and test this 750 level, which makes sense because if you look at it from a day's chart point of view, this chart has actually been ranging for the last few months, and right now it is in a no man's zone, and this no man's zone is unlikely to hold, right? So yes, there is a small support here, but this zone here is likely to break easier than this range itself, which can be noted here. Take a look at this one. This is the resistance as well as a support here. So I'd like to see that this price will further test this one here, and this means there's further upside to the US dollar and further downside to the Aussie dollar. So from technical analysis point of view, the Aussie USD actually gives me 3 alignments instead of just 2 or 1. That leads me to believe that the US dollar bullish is actually a stronger case compared to the euro. These are 3 currencies that I want to share with you guys today, comparing different kinds of currency with FSI strengths, different kinds of currencies with different stories behind the COT, and what kind of conclusions that we can pull off today. If you have any questions, feel free to ask inside the group chats. I'll be more than happy to answer your questions and give you my views on these currencies. Unfortunately, I'll be answering slow today because I'll be in overseas taking care of some few personal matters. But nonetheless, I'll still be answering questions before any of these major news events happen this week. That's all for me today. I hope that you'll be trading this week, because there are a lot of news that's going to come out, and here you go. All these are news that has already come out, and we have a lot more that's going to come out this week. This is all in just 1 week, and if you are not mindful of this data events, you might get whipped very easily. You might get out of this market very easily, even though you start to your technical analysis plans very carefully. So at the end of the day, it is how much work you're going to put into your trades to make sure that they run in your favor. And that's all I have to say for this week. Right? Thank you.
Okay. Any questions with regards to JT's side? Okay, basically he recorded this earlier today because he's not in Singapore. He's actually back in Malaysia to settle some of his personal stuff. All right, so he actually recorded and shared with you guys some of the fundamental bias. All right, but more importantly is even look at the events calendar. You probably need to take note of that because this week is crazy. What I mean by it is that every day, right, you actually see key important data coming in, right? So now it's 8:25. Just now, before we started this webinar, before I placed JT video, I did mention that 8:30 we have two important data coming in for the US, right? Core PCE price index and personal spending. Again, if you just follow on Forex Factory, right, is indicated here orange color is mid impact. All right, is medium impact, but actually this two data is very important, right? Simply click on the folder, you can see that why is this important is because the Fed, basically Federal Reserve, right, is also looking at this, all right, core PCE price index. So you can see previous data is 0.2, expected estimate is 0.1. Okay, so how it's going to play out is that if this actual data at 8:30 comes in, anything less than 0.1, we would see a sell-off in the dollar. Okay, I'm pretty certain that if this comes in less than 0.1, we probably see a sell-off. Of course, personal spending has to come in less than 0.5 as well. But if we see it coming in, all right, better than the previous 0.2 and 0, okay, we might see dollar continue to be supported in terms of the strength. Okay, so this is a very good case study because earlier on today, this morning, all right, I shared with you guys that dollar yen currently, okay, let me just do it this way. Dollar yen, right, we do have this setup that is playing out right now. All right, and price is actually testing the 61.8 Fibonacci, all right? So this setup over here, if I just delete the pattern, all right, this setup that you are seeing over here, hold on, okay, this setup they are seeing over here is actually a divergence setup, all right, that we already discussed this, I think late last week, right, talking about this divergence. You can see that price eventually broke through it. Okay, this morning it opens a gap, all right, because of Hillary's basically sentiment drove yen stronger, dollar weaker. But you can see that after that, price actually starts to retrace. All right, and it has retraced towards this 61.8 Fibonacci area. Again, it's not a line, so you always take note that when you're trading, it's always an area. Okay, and right now it's very close towards this 105.05, which is the area that we are interested to take a trade. All right, but again, you don't just look at technical, because later on, okay, if this 8:30 news comes in positive, all right, so we have about 3 minutes left. If this news comes in positive, we might see the dollar yen breaking towards the previous high over here. Okay, that's about maybe just about 40-30 pips. Highly likely that can happen, all right, if the dollar news comes in positive. All right, but if it goes weak, all right, we might see some sell-off. Right, and this sell-off might be a short-term one, right? What I mean by short-term is perhaps it only lasts for this particular trading session, meaning, you want to take profits aggressively because you are going a counter trend on dollar boost, right? So these are the ways that you need to start having that kind of thought process and how you manage your trade. Okay, so this one I haven't entered because I'm aware that later 8:30 we have this news, so I actually alerted you guys that we have a potential setup. So depending on how the news comes out later, we might take the particular trade. Okay, so we have still some time. All right, I want to walk you through this Forex Live. We always look at the session reps to quickly have an idea what happened in the market itself. All right, so the Euro session came in just on time right now. All right, but let's take a look at the Asia rep first. Basically, I scanned through it this morning. Nothing much. All right, the only two things you need to take note of is this one. This particular weekend news that occur over the weekend. Carney decide this week on his future at the BOE. Right? Simply put, Carney can decide to step down as the governor of Bank of England by the end of this year. Okay, and if he decides to do so, definitely that's gonna impact the UK pound. Okay, so this is something you need to take note, because with Brexit and everything, if Carney, the governor currently, all right, decide to step down from BOE, that's definitely gonna affect the pound. All right, so this one you need to take note, but this is not going to be immediate because he has until end of the year to decide. All right, other than that, nothing much in terms of this Asia rep. All right, let's take a look at Euro quickly. Nothing much as well. All right, basically today in the morning session, nothing much other than some of the Euro flash estimates, CPI flash estimate, all come in expectation, so nothing much is moving. The next important data is definitely this one. Okay, so let me refresh and wait for that news to be released. Okay, once this is released, then I'll go into the technical stuff, and then today we'll talk a little bit about trading plan as well, the importance of it, and how you can start to develop one for yourself. Okay, so we just wait for this news at 8:30, and then we'll look out for that. Okay, just a reminder that everything we share is educational purpose. Even if when we enter trade, it's also educational purpose. So don't just blindly follow the trades that we are going to take. right? So let me just refresh this. Okay. Looking at price, it seems like it's not moving much. All right, so it came in as expected, all right, for core PCE price index coming in at 0.1 as estimate. So what I'm gonna do, all right, personal spending also better than previous. So again, I won't be shorting this trade, all right? So that's how easy it is, all right? So is the concept here is very simple, how we merge technical plus current fundamental and sentiment, how we merge it, all right? So I know Jeremy did short it earlier today. So depending on your own plan and your own risk management, do you want to exit? All right. But personally, I won't be taking this trade simply because of this two. All right. Core PCE price index coming in aligned. All right. Personal spending aligned as well, but it's definitely better than the previous data. All right. So I'm not going to short the dollar as of today. Okay. So again, to share with you, would this trade, you know, turn out profitable if you short it? I do not know, because if I know, right, I won't be here sharing with you guys. I won't be trading. I'll be putting all my money into this particular trade, right? So again, always manage your risk. But what we as traders can do is just to best plan out, you know, what we are going to do in terms of that. All right, good. Okay, so what we are going to do it, and then we let the market do its own movement. Okay, so again, that's how I merge technical, fundamental, and sentiment into one piece. Okay, so sometimes I do miss profitable trade. Sometimes I do avoid losing trades. All right, so this is my plan. Okay, so later on, today we'll talk a little bit more about the trading plan and why is it so important. All right, so let me bring you to wait, let me pull out my stuff. Okay, let me bring you to this week report. All right, just share with you some of the technical and how we actually combine those stuff together. Okay, so this week report, you can see that technical wise is not a lot of setup. Okay, but I'll just walk you through more in depth. Okay, I also saw some of you guys are commenting, right? Cutting short before news release. Okay, so later on when I share with you more about how you want to manage a trade, how you can craft out your own trading plan, you actually have more solid way of dealing with your trades itself, because everybody has very different style of trading, right? Very different risk appetite. Is you can't just follow one style for everyone, right? It doesn't fit like this. So later I'll talk more about that. All right, so this one, technical wise, I would like to share with you a little bit in terms of dollar. All right, later we'll talk about dollar. I'll also talk about Kiwi Yen as well as Chef Yen. All right, because these are some of the interesting one. Okay, so I want to talk about dollar yen first. All right, so let me just clear everything. I'll walk you through the top process, and again, it's always a very repetitive process that we go through in the market. All right, always look at the higher time frame, all right, because that's important to understand what is happening overall in the market. Okay, dollar yen is still in a downtrend. Okay, right now what's happening over here is in a consolidation. All right, this is in terms of daily time frame. Okay, we don't trade the daily, but we do use the daily to monitor overall picture to understand what's happening. All right, so dollar yen is currently in a range environment. So if we drop down to H4 time frame, okay, we can see that nearer term in terms of H4 is actually in an uptrend. Okay, so if you are trading the structure setup, okay, you will be able to identify this, right? 1 to 2, 2 to 3, this retracement, and then 3 to 4. All right, and then this has come down. Okay. Retracement back towards this level, and if I pull my fit is around it should be around the 50% level or less. All right, it's about 32, around that. All right, but basically when I trade this, okay, let me just ensure my tools are working properly. Okay, if I pull fit from here to here, all right, let me just insert all the correct levels. All right, you can see that it comes in about 50%. Okay, so I don't personally, again, I don't trade the 38.2 Fibonacci retracement, though the structure level here coincides very nicely with 38.2, right? But we walked through in the masterclass that because of risk to reward, I won't be taking that trade, right? So usually the minimum level I look out is 50%. Okay, so again, if you traded this based on the structure, you would have potentially have the opportunity to enter at 50% Fibonacci retracement, all right, in expectation the trend will continue higher. Okay, but for us, when I look for it, right, I always spot for the best kind of risk to reward setup. Okay, so how I do it is that I want to look whether do I have any opportunity to wait for a deeper retracement. Okay, so for those who know how to trade this pattern, all right, basically it's a cipher pattern. How the cipher pattern looks like is it goes up, all right. It's like almost like your M shape, but instead of an M, it starts to form a higher high. Okay, so it's like a mountain shape, all right, and then the cipher pattern, you're expecting it to complete something like this. All right, so you are expecting something like this. This is a cipher pattern. So the rules or the criteria, okay, I'll just share with you. This is X point. Okay, let me just pull in my tools as well. This is the X point. Okay, then you would have your A over here. Then your B point is here. So the first criteria that you want to check, right, for B point in terms of a shape like this, a cipher pattern, is that your retracement from X to A, how come I 2? Your retracement from X to A, all right, has to come in. Whoops. Okay, this is not the valid level that I'm looking out for. Okay, hold on. Okay, this one is. This is not the valid level. Okay, but basically, let me pull my chart to show you guys. Hold on. Okay, this one over. Oh, sorry. Okay, that's the daily on a H1 time frame. Okay, sorry. Let's refresh. All right. I actually identified that on the wrong time frame. Okay, basically I identified this pattern on the daily, on the 1 hour time frame. Okay, so again, if H4 just now, right? Just a quick recap. So on H4, the only pattern that you can identify is actually a structure setup, right? But the one that I want to talk about is actually on the intraday level, which is the hourly time frame that we usually trade. All right, based on daily setups. All right. So what we see over here is again is an uptrend. All right, but if you start to pull in your structure, okay, again, this is a very similar level that you identify on H4. But other than that, we do not see any, any structure over here because this previous high, recent high hasn't been breached. Okay, but if you start to pull in, something like an M shape, all right, but this time it's more like a mountain because your second high, okay, it's actually higher, right, and you are expecting it to come down like this. Okay, so again, I'll recap. From X to A, okay, this is your X point. Okay, then this is your A point. This is your B point, all right? So for this criteria, okay, your XA to B. Okay, so your B point has to come in around this region. Okay, anything between 38.2 to 61.8. It can exit by 61.8, but it cannot touch 786. Okay, so for cipher pattern, your B zone is over here. All right, anything between 38.2 to 78.6, but it cannot touch the 786. Okay, so that's your B point for cipher. Then for C point, because it's slightly higher, okay, what you need is an extension. Yeah, so repeat, for C point, what you need is an extension from A to X. Okay, so I'm going to pull Fibonacci tool. I'm going to pull from A point, pull it all the way. Okay, pull it all the way to C point. From A, I'll pull it to X, sorry. Right, and my C point has to come in at 127 and 141. Okay, so that's the area that my C point has to come in. Okay, it cannot exit and close beyond 1414. Okay, so the max it can go is around this area. It can exit a little bit, but it cannot close above the 1414. Okay, so you can see that currently this C point is valid because he has entered the zone, all right, but it never closed above 1414. Okay, so once you have this established, you have your X, you have your A, you have your B, and you have your C. The next point is identify where your D point is going to complete. Okay, so this D point, what we do is again Fibonacci 2. This time round, we pull from X point all the way towards the C point, right? And the completion is at 78.6. Okay, so this is the area in which we are looking out for potential long setup, right? That's why just now we are expecting price to fall lower. All right, so the pattern will look like this. All right, if I draw it in from X to A, then A to B, B to C, and CD down. Okay, so this pattern will look like this. Okay, so again, how we're gonna put entry, stop loss, etc. Okay, again, enter at the completion of the pattern. All right, so you're gonna long over here. Your stop loss will have to go below your X point. Okay, so the buffer again is very simple, right? For H4, you add about 25. For H1, you add about 15 pips. All right, so this one is at about 103.16. All right, so if you minus away 15, it's about 103 level. Take profit, very similar to all the patterns. What we do is we take Fibonacci 2. All right, pull from the highest point, which is your C point over here, pull it towards where the pattern complete. Okay, your first target is at 38.2. All right, so for cipher pattern, usually your first TP level is just about 1:1 risk to reward. Okay, if you aim for TP2 at 61.8, your risk to reward will be slightly higher. Okay, so if you look at cipher pattern, the risk to reward is actually not very high, because if you just take TP1, it's about 1:1. Okay, so that's about cipher pattern. Any questions or any part that's not clear? Okay, forget the front part where I show you on H4 time frame. Just focus on this H1 time frame. All clear for this cipher pattern? All good, huh? Okay, so how I'm going to share with you, why I'm going to share with you dollar yen, right, is because it's very interesting. Before this news came in, all right, before the core PCE price index come in, is trend environment good to use? Okay, to answer Esther's question, yes. All right, so cipher pattern is actually if you look at it, right, it's actually a deep retracement of a trending environment. Okay, so you normally can identify this kind of cipher pattern when market is trending slowly upwards. All right, but if it's on a strong upwards trend, the retracement won't be all the way here. It will start to bounce off already. Okay, so what I would advise you guys is, if you are still not very familiar with the three patterns that we covered on the in the masterclass itself, focus on that three patterns first. All right, because you want to get yourself familiarized with certain technical analysis first. Right, before you start expanding your library in terms of how you want to analyze the chart. So my advice to you is, if you're still not familiar with the Gartley, Bat, and Butterfly, focus on that tree first, right? Then only you start to expand more towards other patterns. All right, so this is one setup. Yes, you can trade it during a trend environment, and usually what you want to do is you want to follow the overall trend. Okay, so in this case, it's a classic example of that. All right, but what I want to share with you is how you can actually plan your trade was before this news came out. Okay, this one we analyzed since last week. We do have a divergence setup over here. All right, and let me just delete some of the lines. Okay, I'll delete this. All right, we have that divergence setup. And what we have is that this neckline has been broken last Friday. Okay, and before this news that I decided not to take it, I do have this potential 61.8. All right, so this is the level that we are looking out for. Initially, my plan is that I'm going to short it here, all right, and expect the cipher pattern to complete, all right? So what you can do in trading is that you can always do this, all right, short over here, take profit over here, change it into a long, all right, and then you can go higher, all right? So you can actually do that. Right, to answer Esther's question, can cipher only for cipher use for trend? Actually, all other patterns you can use it for trend, all right? Just that when market is trending very nicely, you won't be able to find any pattern. Okay, you only be able to find pattern when it's in the range environment. So that's why when we share with you guys that time, when market is in a trend environment, just look for a trend setup, all right? Basically, there's structure setup. Okay, because when market is trending, you're highly unlikely gonna see any patterns forming. All right, I want to share with you this setup on Chef Yen as well. All right, this one basically price is moving higher already, but the same process. All right, again on daily time frame, you can see the yen has strengthened in the past. All right, but recently what's happening over here is in a range environment. All right, so this is on the daily perspective, it's actually ranging. So if we drop to H4 time frame, all right, we do have a pattern over here. So this pattern, right, if you remember just now we walked through cipher. Okay, others have problem with the audio, or is it clear? Are you guys clear for the audio? Can hear? Yep. Very strong echo. Okay, hold on. Let me just do some check then. Okay, what about now? Is it clearer? Okay. Hannah, okay, so you let me know if let's say you can't hear it properly, right? Then I'll move my mic so that it becomes the audio becomes clearer as well. Okay. Okay, so back to this chart itself. So just now we actually have a pattern that is like a mountain shape, all right? Basically, your second low is lower. Okay, so in this case, we do have something similar as well, right? And this one is actually on the opposite one. Basically, just now we have a higher high, but this one we have a lower low over here. All right, and we do have this pattern. All right, so if you look at this, right, it's actually very similar to just now that one, just that this setup is W, just now it's at M. Okay, and this low is actually lower than this low. So again, what we do, we have our X over here. All right, and then A point, B point here, C is down here, all right, and of course D point completion is at the top. All right, and what we are waiting for right now, okay, is you need to measure from X to A, okay, to see if the Fibonacci level is valid. Okay, so you can see that this pattern, this retracement comes in between 38.2 to around 61.8, but never touched the 786. Okay, so this is actually a valid B point. Then next thing you want to measure is measure your C point. Okay, so C point is an extension. So what you do is you pull from Fibonacci, you pull from A point, you pull it all the way to X, okay, to measure your extension. You can see that this C, all right, didn't touch the 127, okay? So this is not a cipher pattern, okay? But if you start to insert your 113 level, okay, if you start to insert your 113 level, you would see that price actually touched the 1.13, okay? So when price touched the 1.13 and not the 127, this becomes a sharp pattern. All right, so just now dollar yen is a cipher pattern, right? But this chef yen, all right, it's a sharp pattern because of this C point, right? And once you identify that this C point is 113, all right, and it's a sharp pattern, what you need to do is next identify where your D point is, right? So for sharp pattern, your D point, you pull from X to A, right? So slightly different over here. You pull from X to A. Your D point completes at the 88.6 over here, okay? So you can see that price is currently testing the completion of this pattern, okay? And if I draw it in, how your sharp pattern look like, right, is X to A to B, B to C, and then over here, okay? So this is the setup that we are looking at currently, all right, for this pattern that is just completed, all right? But if you look at this pair, which is chef yen, all right, basically we do not have much data to do fundamental analysis on the Swiss franc, Okay, so usually we don't trade the Swiss franc, all right, but we do share certain setups once we identify them. And I want to share with you, if you go to the daily time frame, okay, maybe H4 I'll show you as well. If you look at this, right, if I start to zoom out and I put in a horizontal level over here at where the point completes, okay, you can see that it's a pretty significant top of the range, all right, one test over here, second test over here. Okay, so in terms of technical analysis, all right, this D point completion is a pretty strong, it's facing a pretty strong resistance, all right, but doesn't mean that it cannot break above. All right, because what you are seeing right now is price is actually testing and see if it can break this point already. Okay, so what I want to share with you is if let's say H4 time frame is too high a time frame for you to trade, meaning if you trade H4, your stop loss needs to be wider. All right, and you don't want to trade your stop loss to be too wide, because if you put a trade here, this is 106.2. Your stop loss has to go above your X. Your X is at 106.47. If you add another, let's say 25 pips buffer, that will give you 106.7. So if that's a 50 pips, all right, if your stop loss is too huge, what you can do about it is that you can go to 1 hour time frame, all right, and start to look for opportunities right around here. Okay, so what we identified here, all right, is that we do also have a divergence forming for this particular pair. Okay, price is pretty higher high, but your RSI is not doing that. Okay, again, what you need to wait for is then for price to break this neckline. Okay, so far price is still not showing sign that it's going to turn. Right, so what you can do, right, is again on higher time frame H4, you spotted a pattern. You can actually go down to a lower time frame and spot for opportunity to actually, lower time frame opportunity, so that your entry can be more confirmed. Right, basically what it means is that you want to wait for this to happen first, price break below it, all right, and then only you wait for the retracement to come back up and you trade that setup. Okay, so this one is some of the techniques that you can actually use if you want to trade on a lower time frame. Okay, all clear with that? Okay, but if you ask about fundamental in terms of Chef Yen, we don't have enough data to actually analyze the Swiss franc. Okay, so normally what we do is we just ignore and don't trade the franc itself. Okay, so again, this one I just share with you for some of the purpose to share with you how we can actually manage trade on a lower time frame. Okay, but we don't trade this. All good? Okay, as that's a question, D point 88.6 is based on okay, Esther, to recap, okay, this trade, to recap the sharp pattern. Okay, to recap the sharp pattern, right? Let me just clear everything again. Okay, to recap, your D point, okay, let me just label that. This is your X. This is your A. Okay, so for sharp pattern, okay, your D point is a retracement from X. You pull from X, Fibonacci retracement all the way to point A, and you're waiting for that retracement up to 88.6. Okay, so that's why your sharp pattern looks like this. X to A, A to B, B to C, and then up here to D point. Okay, so the 88.6 for D is actually a fib retracement from point X to point A. Okay, so this is a slightly different criteria, different rule sets for this pattern itself. Okay, any other questions you want to clarify? Okay, if not, right, I'll walk you through one more pair, which is today's watch list. Let's look at euro dollar, right? Okay, so again, euro dollar, if I bring you the same process on H, right, we always look at daily time frame first, what's happening. Okay, so if you look at daily time frame, you can see that price is currently actually not doing much. The recent move is bearish, right? But if you look at the daily perspective overall, it's actually in a range environment. Okay, so this is the previous low. You can see some support over here, right? But daily is basically in a range. But if you drop to H4, okay, you can see it's a downtrend, right? H4 is clearly a downtrend. It starts to turn over here as well, right? But it's still in a downtrend. Okay, so on a daily perspective, that means every day, intraday perspective, what we have over here, all right, is that previously it's a downtrend, but over here we have a structure set up which is turning bullish already. All right, so if you pull in your 1, 2, 3, 4 point, okay, you actually see this. Okay, and then up here. So it's a very nice structure play. All right, 1, 2, 3, 4. Then the next thing you want to do is pull in your Fibonacci tool from third point to your fourth point, and you find confluence over here. Okay, so if you look at this example, this structure over here is actually nearer to 50%. All right, but what I like to do is, because of risk to reward reasoning, all right, I always like to actually use the 61.8 instead. All right, so most of the time I actually take 61.8 Fibonacci retracement because you can see over here in terms of the structure confluence, it's more towards the close of the candle itself. All right, so I like to take those instead of the 50. Right, but again, I always share with you guys that there's actually pros and cons to it. So the disadvantage is I might miss trade, okay, if it just bounce off the 50%. But if it comes deeper, I might have a better risk to reward to take this trade. Okay, so what I'm waiting for is for price to fall lower towards the 61.8, and then I'm expecting price to go higher after that, all right, following this trend upwards. Okay, and on top of this, what we have is that if you start to see swings like this as well, okay, from this high to this low, you have W shape forming as well. Okay, so once I do that, I can start to put in my Fibonacci tool from this level to this level, and I can see this point. All right, so if I start to label, this is my X, this is my A, this is my B point. All right, you can see my B point. Okay, quite a lot of it. Let me reduce it. Okay, you can see my B point comes in at a 50% Fibonacci retracement. All right, so that gives me a valid back pattern. All right, and I know this back pattern is going to complete at the 88.6. All right, so my C point is here, and the completion is at the 88.6. All right, so what I can do over here is I do have a potential buy setup over here. All right, and I have a back pattern to sell it at the top of the completion. Okay, so what I can do is I can wait for price to come down. All right, look for a bullish setup. Okay, I long it, and my target can go all the way to the completion of this back pattern, and then I can turn and short. All right, take profit from my long position, and then I short it from there onwards. Okay, so this is how it's very common in trading that you start to see, you know, one setup follow another, just based on the 3 strategies that we share with you guys. All right, that's how you can play out. Okay, if you are even more hardworking, all right, you will actually see this divergence happening as well. Okay, you have this divergence on H4, so you have price printing lower low, but your RSI is actually printing higher high. Okay, and this neckline over here, if I zoom in a little bit, okay, you can see that this neckline over here, price has also breached it. Okay, and let me just clear my fib. You can see how it plays out very nicely as well. If I pull in my fib, because this neckline has been broken, okay, this neckline broken, I pull in my fib from the low to where the price has broke the neckline. You can see this retracement comes in. Yeah, if I draw in the neckline, this neckline, right? You can see that this retracement comes in nicely at 61.8, and then it bounced higher. Okay, so that's how you can actually, you know, using this very simple 3 strategies that we covered in the masterclass, you can spot a lot of opportunities in one particular trade itself. Okay, so I hope that, you know, this kind of sharing, you guys were able to really start to, you know, combine how these 3 strategies can actually combine into one trading plan itself. All right, so if I go down to H1, that's how you can play out. First, you have this divergence. All right, price broke the neckline, comes down at 61.8. You take a long trade. All right, it moves higher. You take a profit. All right, you take a profit. 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 you can see that now you have 1, 2, 3, 4. If it comes down over here, okay, you look for another opportunity to buy the market. And then if it goes higher, you can look to short for this bad pattern. All right, so that's how you can follow through the market itself. But you can only do all this if you start to plan out, right, before the trade actually happens. All right, so any questions that you guys have? Or any particular pair that you want me to walk you through more in depth? All right, you can see Euro Yen is actually falling right now because of dollar strength coming in from the 8:30 data itself. All right, so again, if price do touch this level today, all right, that's only about, let's say, about 20 pips away from it. You want to be able to decide, all right, for yourself whether you want to take that trade, because dollar momentum for today is definitely going to be bullish. All right, so you might want to just avoid taking this long setup. All right, Esther asked, the double bottom also looks like double top. Which one are you referring to, Esther? The double bottom also looks like double top. Okay, maybe you want to be more specific as to which one you are referring to. The one you put the square. Oh, okay. Let me do this. Okay, you're referring to this one over here. Okay, this is, yes, if you just look at this two, this might be a double top, right? But again, my strategy over here, the technique that we use, right, is that we don't trade just based on double top or double bottom, right? But we always look in terms of RSI. Okay, does the RSI agree that it's actually a top and it's turning, right? And how does the RSI agree is that if there is a divergence happening. Okay, so if you look at this top, right, basically there is no RSI overbought or oversold. All right, and there's no RSI divergence. All right, so usually this kind of case, you just ignore that kind of double top. Okay, we always want to only trade double top when there is a RSI extension. That means overbought, extreme area, overbought or oversold, and there's a divergence. Then we only trade the kind of double top. Okay, so in this case, basically we just ignore any tops, that double top or double bottom that is formed if there's no extreme in RSI. Okay, yep, good. Okay, let me walk you through one more pair, all right, and then we'll take a quick break, and then after that we come back for more sharing of the market, plus talking to you more about the trading, the trading plan itself. Okay, so let me walk you through pound yen, right? Because pound yen is another interesting one on a daily, on an intraday level. Okay, so again, the same process, all right? Look at daily time frame. Very clearly, it's in a downtrend. Even now over here on daily, it's still downtrend. Okay, because this you have 1, 2, 3, 4, right? So it's still in the downtrend. If you go to H4, okay, H4 wise is in the downtrend, but recently it's in a consolidation phase. Okay, so what I want to walk you through is on H1. Okay, we have more interesting setup because today, all right, we do have two kinds of setup playing out over here. Okay, so if on H1 you can see, all right, it's basically in a range environment, all right. So that's where you see a lot of patterns coming in, right? And there's this example. Okay, this is a very good case study because if let's say I take my X point here, okay, and if I take my X point here, I would have different setup. Right, one, right, let's walk through this first. If I take the X point over there, then I'll have this swing, right, down to this, X to AA to B, right, and then B to C going higher. Okay, so once we have this, right, you can see this C point is higher up there, all right. This is either a cipher pattern or a sharp, all right, but depending on the Fibonacci extension of your C point. So to measure the C point, all right, we pull our Fibonacci extension from from A, this point, from A point to X point. Okay, and we see that price comes in at 1313. All right, so 1313 is actually a sharp pattern. All right, so it's a sharp pattern. So if it's a sharp pattern, how we find completion is we use Fibonacci retracement, pull from X to A, all right, and the completion level is at 88.6. Okay, over here. Okay, so with this, all right, we have one pattern that looks like this: X to A, to B, to C, and then complete at D point. Okay, okay, so this is one case that we can actually look for a long opportunity over here. But if we start to take X over here, okay, so we start to measure and draw in that swing. Okay, so I'll just remove this. If we start to draw X from here instead, okay, X to A, all right, and then A to B is this one. Then B to C is all the way up. All right, so you have A here, B. Okay, this changed to B. C point on top over here. Oops. All right, then we start to measure from Fibonacci extension for C point. We pull from A to X. Okay, you can see now instead of 113, all right, we do have a touch of 127. Okay, it just touched for my broker. So this again depends on the pricing of your broker. All right, some broker might have touched it, some broker might not have. Okay, so if you touch 127, it becomes a cipher pattern. Okay, so it becomes a cipher pattern. So for cipher pattern, where the D point completes, all right, would be a Fibonacci retracement from your X point all the way to your C point. Okay, and it comes in at 78.6. Okay, so it becomes over here. So then your cipher pattern will look like this. Okay, so again, depending on your broker pricing over here, does it touch 127? If it touch, then it becomes a cipher pattern itself. Okay, so I just want to share with you that in the market itself, all right, you can and quite often see patterns, more than one patterns or more than one setup coming in, all right, and pound yen is actually one of them. All right, so I'll just clear this to make it clearer to show you the two different levels. All right, so you can see that we have one level over here, one level over here. Okay, so how do you deal with this kind of situation when you have two kinds of level? Of course, if you want to be more aggressive, you want to ensure that you get filled in the market, right? Then you don't miss that opportunity. You might want to look at the higher one. Okay, that means you wait for price to touch the higher one, and then you start to monitor the price movement to decide whether you want to enter or not. But of course, you are more conservative, right? You take the lower level. All right, so if I just drop in the horizontal level to show you these two structure level, they are pretty valid in terms of support and resistance as well. Okay, you can see that in the past, this whole area was tested. All right, over here it was tested, over here it was tested. In the past, it was tested as well. Okay, so this is how you can deal with it. If you're more aggressive, look for the high level. If you're more conservative, look for the bottom level. All right, again, all these things, there's always pros and cons, whether you miss that trade or whether you have a higher risk to reward, etc. Right, depending on which level that you want to look out for. Okay, any questions that you want to clarify so far in terms of what we went through? All good? Okay, if it's all good, we'll take a quick 5 minute. All right, we'll come back at 9:13. All right, and then at 9:13, I'll talk a little bit more about the importance of trading plan. I'll give you an example of what is a trading plan, right? One of our sample, and then you need to go and start crafting your own trading plan. And then if you have any particular market, any particular currency that you want me to walk through, you can let me know as well. Then we walk through the market itself. Okay, so we'll take a quick 5 minute. All right, now is 9:09. We'll continue at 9:15. All right, so you guys can take a break, and then I'll come back at 9:15.
I can't stop shaking. The room has a groove and the floor is almost earthquaking. Look what we're making. History out on the floor and it's just awakening. So get that needle in the core, scratch that back and give me more. You know exactly what I came here for. Back it up and do it again. From the middle to the top, but again. La 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 la, la 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 la. Back to the middle, to the front, to the end. La 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 la. Everybody la 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 la. I don't care if he is a friend from the front to the middle to the back to the end. Back down, back down, back down. Back it up and do it again. Back down, in the summer like okay, the kind that the Duke used to play and make it more swingy, hey, hey. And then give me some horny, you know the bubble, babe. Come on, get this in me. Slam that bass and make it sing. Get those strings that rip and sing. You know exactly what I came here for. Back it up and do it again. From the middle to the top, to the end. La 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 la. La 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 la. Back to the middle, to the front, to the end. La 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 la. Everybody la 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 la. I don't care if he is a friend from the front, to the middle, to the back, to the end. Back down, back down, back down, back down, back down. Back it up and do it again. Down, back down, back down, back Get that needle in the core, scratch that back and give me more. You know exactly what I came here for. Back it up and do it again. From the middle to the top, to the end. La 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 la, la 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 la. Back to the middle, to the front, to the end. La 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 la. Everybody la 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 la. I don't care if he is a friend from the front, to the middle, to the back, to the end. Back down, back down. Back it up and do it again.
Okay, let's come back. All right. Okay. So what we'll do, show you what is an example of a trading plan. All right. Because every time when we talk about trading plan, some of you might not have seen any of it before. All right, and might not understand or might not even know what a trading plan is. Right. So I want to walk you through how a trading plan looks like. All right. This is not a most comprehensive trading plan. This one was done by me, I think. Since I started trading, I think how many years back? This was done, I think, 2 years back. Right. It's not one of the most comprehensive one, but I want to share with you an example of it and why is it important to have it. Okay, and of course, in the future is you need to do it something like this. All right, for yourself. Okay, and of course, if you need to go in as detailed as you require. Okay, so what's going to happen in a trading plan, right? This is an example that I did, all right? And this plan was actually crafted with two person in mind, right? Basically myself and one of my trading partner last time, Lester. Right. So what we did last time was that we actually manage one account together. All right. And how we do it is that we break. That's why it's important to have a plan, because we know what are some of the responsibility and roles that we need to play out with. Okay, so in a trading plan, all right, again, there's no fixed, structure that you need to go and write a plan, all right? It's like a business plan itself, all right? So if you take trading as if it's a business, right, you need to have a plan, in terms of business, you need to know what is a marketing plan, what's your business development plan, and etc. Okay, so in trading, it's actually the same thing, right? By trading, of course, you don't talk about marketing and such, but you talk about how you have an analysis plan, all right? Analysis plan as well as execution plan. All right. So for those, if you still recall, right, in all our strategies that we share with you, all right, basically we always break it down into two components of the plan itself. All right. One is analysis. One is engagement. All right. Basically execution. So over here, all right, this plan itself is a one pager. All right. So it's a pretty concise one. All right, so to walk you through, right, what you need to have in the plan is that the first portion is an analysis plan, all right? And then, of course, because we manage by two persons, so this one who is in charge of this is basically me, all right? And what is the action that I need to take? Okay, and this action that I need to take is basically to identify any setups that I have, all right? That time, basically, the account that we trade is mainly these two methodologies, all right? So you need to put in the action plan, all right? So what you need to do for the particular person, all right? So for me, I need to start identify potential setups during the weekend, okay? And then you need to be very clear what is the time frame that you are focusing on. Okay, so this plan, the time frame that we were focusing on that time was H4 and H1. All right, so what it means is that we basically do not look for setup anything lower than H1, and we don't look for setup anything higher than H1 itself. All right, and what are some of the setups and strategies, methodologies that we adopt? All right, basically is over here. All right, basically we trade the Gartley pattern, the bat pattern, cipher, and butterfly, as well as structural patterns. Okay, so it becomes very clear. Okay, the only thing that I'm lacking over here, all right, is that I did not put in the very specific rules and criteria for each of this setup, all right, because we already know in mind, all right, what are some of the criteria, what are some of the basic rules for this particular setup, all right, so that's why we do not have that over here. Okay, of course, if you're very new, what we will advise you is to put in all the rule sets for that. For example, if you are trading structural patterns, what are some of the criteria, what are the rule sets to have in place? Okay, of course, the next thing you need to do is decide your portfolio. All right, what are the currency pairs you're going to trade? Are you going to trade golds? Are you going to trade indices? So that time, all right, we decided to trade all currency pairs, and that's about 28 currency pairs that we are looking at, right, including crosses, but we do not trade metals or indices. All right, so that's a very basic in terms of basic rep of what we need to do, what is our portfolio, what's our plan, all right, based on analysis purpose. All right, and then you can see over here, last time we adopt this pending technical score, right? Basically, we look out for market condition, SNR confluence, FIB extension confluence. If there is, we do add certain points to it. Okay, but of course, we don't use this anymore. All right, this was used in the past. Okay, so you need to add in something like this also. So if you are trading and you want to craft a plan for yourself, pending technical score, but if now, right, you're starting to adopt, let's say, fundamental and sentiment, you can add in a fundamental score. All right, so if let's say you want to short dollar yen, all right, and your fundamental score is must be confluence with the overall FSI, all right, fundamental strength index. Does it confluence? If no, then you probably want to skip that trade or you don't give it a score. Okay, but if it confluence, then maybe you want to give it 2 points, something, right? Example like this. And then last time we also have an engagement rules, all right, basically telling us where we're gonna put our entry price, where our stop loss is gonna be. All right, so you can see some of the things are still in place, all right, like 25 pips above buffer for H4, 15 pips buffer for H1. All right, TP, where are you going to put it at? And then are you going to take TP2 or only just taking TP1? All right, you can see all this are very clearly laid out, all right? And it's important because when you start trading the market without all this plan, all right, and then you start to get emotional, right? You start to, you know, follow based on what you feel, then it's not a very right way of doing, of trading the market itself, all right? So you need to have all this black and white written down, right? So whenever you are unsure, when you're trading, you know, you start to feel that, hey, should I do this? Should I do that? Go back to your plan, refer to it, and follow that instruction. All right. So last time we also only consider trades that are at least 3 points. All right. So based on pending technical score last time, all right, we only take trades that have at least 3 points. All right. But this one is no longer relevant as of now, because we don't use this anymore. But we use fundamental and sentiment. All right. So you can also add in certain scores according to your personality, your style. All right, and then last time we used a lot of pending orders. All right, so we also set expiry time for those orders itself. All right, and the time we set it is at the end of the week. All right, we cancel all the pending orders and then we decide to reset. That means redo all our analysis for a new week itself. All right, and then what's going to be the execution plan? All right, basically because all this, right, is all analysis. All right, there's no entering of trades, there's no management of trades. All right, so the execution plan is where all this comes in. All right. So the person in charge was actually Lester. So his action plan, all right, basically his role or his responsibility is to key in trades, all right, before 2 p.m. on Monday, all right. So basically what I do is over the weekend, I analyze the market, all right, and then during Monday when the market is open, before 2 p.m., Lester has to key in all the pending trades that I've analyzed for him. All right, and then for trade management, right? So basically, if we already have trades running, what should Lester do, right? So the time we decided that for trade management, okay, no more than 4 concurrent trades, meaning no at any point of time there shouldn't be more than 4 active trades running, right? And this is to be monitored by both traders, simply because, you know, sometimes I can monitor, sometimes he's not in front. Then, you know, we take turn to do that. Right, and why we have 4 concurrent trades that time is because we risk 2% per trade. All right, so if 2% per trade, if 4 concurrent trades are running, and, you know, worst case scenario we lose all 4 trades, that drawdown for the particular week will be about 8%. Right, so that is that's a risk that we actually set for ourselves, the maximum risk for ourselves. Right, so then the criteria is, okay, what if we have already 4 concurrent trades that's running? Right, so the action plan here is if we have 4 active trades running, we cancel all other pending trades. All right, so this limits drawdown to about 6 to 7% per week. All right, because if 4 of it loses, maximum is only about 8% loss. Right, and if price move in favor by our position by about 80%, right? So let's say if TP we set it at 100 pips, all right, and price has moved in favor of 80%, meaning price have moved 80 pips, right? We'll move our stop loss to break even to protect that particular trade. Okay, and then after that, we'll cancel all pending orders at the end of the week. Right, so money management is kept very simply. Percentage method, 2% based on 1,000 sizing. All right, basically means we risk 2% per trade, right? And our circuit breaker back then was about 40%. That means circuit breaker here means if we suffer a maximum of 40% drawdown in that account, we're gonna stop trading this entire plan, all right? And then reassess the situation itself. Okay, so you can see that this one pager, all right, though it's not, you know, into a lot of details like, you know, how are these methodologies, what are these rules, it has the essential component of a trading plan. Okay, because what it serves is that it tells the trader exactly what to do when certain scenario play out, all right, what to do when certain things happen. Okay, and this plan is constructed very rationally when you are not trading the market. Okay, that is very important because when you're trading the market, when you have money at risk, you tend to get emotional. All right, your psychology tends to get affected. Okay, so that's why you do not want to have those when you are writing a plan. All right, always write it with rationality in mind. Okay, so this one again is not the most comprehensive, most ideal trading plan, but it's an example that I want to show you guys so that you know how a trading plan looks like. All right, so all good. Any questions that you guys want to clarify regarding this? Okay, I would strongly advise that all of you, all right, to go and write a plan for yourself because each traders will have very different in terms of engagement rule. What are some of the basic rules that to allow them to take a trade? Their trade management is definitely going to be different. Your money management for different traders is definitely going to be different as well. Okay, so I strongly advise that all of you to go and write a plan for yourself. Okay, so what you can do is you can write a plan. You can email me to ask for suggestion. Okay, again, there's no right or wrong in trading, but what you can do is you finish writing your plan. You can email me, ask for certain suggestion. If certain things you're not sure if it's good for you overall. Okay, I will give you my feedback. Okay, but I cannot write a plan for you. All right, so you still have to do the work of writing your own plan. I can give you my feedback. Okay, all good. If you have any questions, feel free to ask. Okay, circuit breaker. Okay, circuit breaker here is referring to maximum drawdown. All right, so circuit breaker here means when we hit a maximum of 40% drawdown. So if case in point, right, if I'm risking 2% per trade, okay, and 40% drawdown means I lose 20 trades consecutively, I'm going to stop trading this plan, meaning I'm going to stop trading this entire account. I'm going to reassess my methodology. I'm going to reassess my strategy before I start trading again. Okay, so circuit breaker means I pull the plug and stop trading. So this is very important because you need to have that for yourself also. Okay, so you can put it as maybe, up to you in terms of your risk profile. You can put, if you're comfortable risking a total of 50%, all right, then it'll be a 50% circuit breaker. If you're a very risk averse kind of trader, right, and then you want to just put 30%, all right, then that means when your account suffer a 30% drawdown, you actually stop trading that plan, reassess, evaluate your system, all right, your strategy, and then only start trading. Okay, when we mean maximum drawdown, it's actually not for a certain period of time, but it's throughout your trading career for that particular account. Okay, so for example, if you start trading the account in, let's say, 2016, all right, up to now in November, that's 11 months, all right? So that drawdown is actually cumulative. That means you are actually starting to clock your drawdown since start of the year. Okay, and we are talking about maximum drawdown. So let's say if you fund your account with a 10,000 account, okay, 40% drawdown means you lose 4,000 for the particular account. So once you lose 4,000 for the account, you're going to stop trading. Okay, so that's what we meant by circuit breaker. Clear? Okay, any other questions that you guys have? Okay, so that's for trading plan. Okay, so if you, the AC you mentioned refer to stress. What's AC? Sorry, Esther, what do you mean by AC? Oh, account. Okay, I don't really get your question, but basically what it means is that this circuit breaker is actually your account. All right, basically means if you start an account, right, with $10,000, you can set a maximum drawdown that you are prepared to take. Okay, so if let's say it's a $10,000 account, you set a maximum drawdown of 30%. If your account loses a total of $3,000, you're gonna stop trading that account. Okay, that's what I meant. Okay, so it's clear. Okay, so if you want, I can send you guys. All right, later I'll drop a link. I can just drop a link now. Okay, I'll share with you guys this link. All right, go and change it accordingly. Okay, do not just blindly follow all the details that I write in there. But what you need to do is go and tweak it. All right, based on what you are comfortable with. Okay, spend some time doing it because it's very important. All right, all good. Okay, Jeremy has a question. Webinar. Okay. Jeremy asked the question. Okay, so Jeremy has a question. Jeremy asked for euro dollar just now when we were looking at it, how come I didn't execute it? All right, with fundamental, align, and market data, can we use two sets of Fed Fund Confluence and make a short? Let me go back to the chart now. Okay, just to answer Jeremy's question on this. Okay, so why I don't take a short just now, just because of dollar strength and such, is very simple. Because before that, all right, I look at any potential setup based on the methodology that I'm trading. So if there is no valid strategy that I'm trading, all right, I won't be looking at any trades. All right, so what I'm doing is I always look for the key areas that I would like to source for potential trade first. So if there's no key level, I won't even bother taking a trade, even if, let's say, there is a strong economic data that is released, right? Simply because what I'm doing is I want to have technical alignment, fundamental alignment, and sentiment alignment. All right. So if only fundamental and sentiment without technical, I won't be taking a trade. All right. So that is my personality, my style of trading. JT1, if you attended the fundamentals masterclass by JT, all right, his strategy is slightly different because he doesn't really trade off a very specific point of technical. Right, he shared it during the Saturday as well. He usually just take trades when fundamental is aligned. Okay, so this one is something that there's no right or wrong again, but it's something that you need to put it inside your plan so that you are very clear when you pull off this trade. Okay, it's according to it, so that over a period of time, right, whether you are making money or losing money, you have a set of data that you actually can evaluate for yourself, right? Whether that strategy that you're using, the methodology that you are using, is it profitable or not? Okay, and you need to be consistent about it. That's why your trading plan is so important. Because let's say, all right, you have a trading plan, you follow that trading plan, and then you trade for the next 3 months. If your result is not a favorable one, meaning over the next 3 months, all right, your strategy is not making money. Okay, we can then take your trading plan out and then reevaluate where you can improve on it. But if you do not have a trading plan, you do not follow it consistently, you cannot do any form of evaluation. All right, so that's why it's super important to have that kind of plan. Okay, and I know some of you, especially for Jeremy, you are trading multiple strategies, all right? So what you need to do is you need to track all of them very closely. So over a period of time, then you can start analyzing which strategy is profitable, which strategy you actually can tweak a little bit to make it even better. Okay, so these are all very important things that you need to start doing, right? You also need to start doing journaling, right? So this is where just now I wanted to share with you. Journaling is very important. Right. Again, I can share with you this template. But basically, it's a very simple Excel. That actually, I would just say that you can also craft this Excel yourself. All right. And then you can start journaling. Right. It's just like a diary. All right. But instead of writing what happened, you actually just clock in the certain things that you did in the market itself. Okay. So give it some time. Right, give it some time for my Excel to open up so that I can share with you this journal itself. Hold on, it's a bit slow. Okay, at the meantime, while we are waiting for the file to be open, any questions that you guys have? All right, regarding trading plan, all clear? All good? Okay, okay, so let the file open, then I'll share with you an example of a trade journal. Right? There's many ways you can do it. All right, you can do it in an Excel, you can do it in your physical book if you want to. You can also do it in terms of some of the students that I know. All right, for example, Jeremy, he did it through PowerPoint slides. Up to you. You want to start blogging about it online, you can also do that. All right, basically the whole key, the intention here is to track your progress as a trader. All right, track your trades so that over a period of time you can actually look back into the trades, and then we as coaches can also tell you where you can improve on it, where your analysis wasn't proper and such. All right. So my com is slightly slow. A lot of files are running, so give it some time to load up. All right, let's take a look at just now we mentioned about dollar yen. Let's look at price. All right, price is basically still hovering around that level, not doing much. Okay, my Excel is very slow right now. It's a huge file. Any questions from you guys? All good? Okay, it's finally up. All right, so this is how a trade journal file looks like. All right, again, whoops, sorry about that. All right, so this is how a trade journal file looks like. Nothing fanciful. All right, it's just a simple Excel. But what you need to have, all right, the basic things that you need to have tracking it is, you need to have at first, right, is the date. All right, so you can see this is empty because this is actually a template that I have. All right, so this is the date. All right, you basically need to put it either you do it on a daily basis, or some of our students do it on a weekly basis. Right, you either do it weekly or daily. Right, depending on your time frame that you are trading. Of course, if you are trading H4, you might want to just consolidate all the trades that you have done for the particular week itself. Okay, and if you are doing it on H1 or even smaller time frame like M15, then you might want to do a daily journal. Okay, so some basic things that you need to clock in is pair. All right, what is the assets that you're trading? What is the currency pair that you're trading? All right, that's very important. Okay, and then of course the date is important because you need to know when you took that trade. Over here, the next one, the important information that you need to capture is what is the potential setup. All right, so based on the strategies and the methodologies that you have, all right, this potential setup basically is to write in a little bit information about the reasons why you take that trade. Okay, for example, if let's say it's a structure trade, then you can write here structure trade, right? You might also want to add in like bullish structure or bearish structure. All right, so basically this is to remind you next time that the reason or the methodology of why you actually took this trade. Okay, this is important because when you do a review of your trade, let's say 1 month later you want to take back and do a review of the trade, it's important to have this because when you give us that means when you share with us, and we do a review and then we look at your trading journal, we straight away can point out and say, oh, okay, let's take a look at this particular trade. And then you open up your chart and then you find out that, hey, I did my analysis not very correctly, all right, not accurately. Right, so then that's where we can start to pinpoint to you where you can start to tweak, where you can improve a little bit here and there. All right, you also need to capture where you enter that trade, what's your stop loss, what is your take profit 1 and 2. Okay, over here you can see there's also RRRR. All right, so what I did was a very simple Excel calculation. So if I key in, let's say my price is now at 105.05. Okay, my SL, let's say if this is a sell trade, my SL is to be above. Let's say it's at 105.50. All right, you can see my risk over here is 45 pips. All right, and let's say my reward I aim at 104. All right, so that's about 105 pips. All right, you can see then this simple calculation just helped me to calculate. I'm risking 45, I'm aiming for 105. All right, so my risk to reward for this particular trade is 1:2.3. Okay, so this is just a very simple Excel calculation. All right, again, all this is not that significant for your trading journal. Sorry. All right, so again, these are something that if you want, you can just do it yourself. All right, so the next thing to share with you is, okay, in terms of risk management, I'll cover this in another webinar, all right? Because if I dive into risk management now, we might not have enough time to cover everything in 20 minutes, all right? So today we just stick to trade journaling and the importance of trading plan, all right? You guys have any question? Again, I'll just exit this and I'll share that file with you guys. You can go and download and just play around with it. Any questions that you guys have? Oops, where's my file? All good? Okay, any particular trade or any particular currency you want me to talk about? If not, right, let me just do a quick recap, all right, for this particular week itself. Why is it so crucial when you are trading the market? Aussie dollar, all right, sure. Okay, but let me show you. Okay, since you are talking about Aussie dollar, this is important. Tomorrow at 11:30, all right, we have the RBA cash rate and rate statement. Okay, this is going to be important simply because, you know, whether the RBA is going to cut rate or not is definitely going to impact the market. All right. And if you look into the FSI, basically, you look into the fundamental for the recent week, Aussie has been improving. All right. But overall, it's still in the negative territory, but it's improving. All right. So highly unlikely the RBA is going to cut rate tomorrow. Okay. So let's take a look at the chart for Aussie dollar. Here, over here. Okay, let me clear off my previous analysis. Okay, let's look at Aussie dollar. All right, again, the process is very similar. All right, we go over to the daily time frame first, look up what's happening. All right, if you look at this previous uptrend, then a very strong downwards move. All right, recently what's happening over here is in a consolidation phase. All right, and over here JT actually did point out very nicely just now in the video earlier. All right, this is the resistance. All right, and bottom over here we have some form of support. All right, so 7.7 is actually a very strong resistance. All right, support level comes in at 7.465 around that region. All right, but again, we don't trade on the daily time frame, but we know on the daily perspective what's happening over here is on in a consolidation phase. All right, so we drop down to H4 to see if there's any opportunity. Right, and over here again, we understand that it's in a range environment. All right, so just quick recap. All right, range environment, what methodology do we adopt? All right, so use this as a quick recap for what you guys have learned as well. Yeah, you should be quite easy. Yes. All right, you look for pattern, advanced price pattern. All right, so again, go back to the basic. To look for advanced price pattern, always start by training your eyes to look for price swings in the market. All right, and we don't need to look a lot because what we want to identify is what's happening in the recent move first, right? Because whatever happened in the past is no longer important. All right, so okay, you got a pattern, all right, but I'm not sure it's correct. I'll walk you through what I see in the market first. All right, so the most recent one that we identify over here, all right, we do have this most recent swing from the low over here to the high. All right, and then from this high, we can see market starts to swing up and down like this. All right, over here and then down. All right, so we do start to see an M structure forming. Okay, but of course, then you need to, after you identify a potential M structure, you need to pull in your Fibonacci tool, all right, to start to see if the criteria actually meet. So you pull from the recent swing low over here all the way up. All right, you can see this retracement comes in at 61.8 Fibonacci level. Okay, so a quick recap, right? Once you see 61.8, you should be very clear what pattern is forming. Okay, so the Gartley pattern is actually forming, and how I trade it, okay, is I use extension, right, from B point over here to A, and I look up for the 127 extension over here. Okay, this part, right? So my pattern looks like this: X to A to B, B to C, and then CD down here. Okay, so now I identified that this 127 area is a potential area that I'm interested to look for a buy setup. Okay, so this is just purely based on technical analysis. This is the level I'm looking out for, right? 0.7545 area. Okay, Esther found a cipher pattern, all right, but not sure. Okay, just a quick check. For cipher pattern, which time frame are you looking at? Is it a H4 time frame? Okay, actually daily. All right, so yes, H4, I might not spot it. All right, so I'll keep this H4 over here. Let's go to daily and see if we can see any other patterns. Let me just clear this. Okay, maybe you can see, okay, to help me see if it's correct, what is your D point completion level? Then I can check whether you identify it correctly or not. Seven. Oh, okay. A bullish one, is it? Okay. Okay, there is a bearish cipher complete at 0.77. Okay. If your completion is at this level, basically you shouldn't be able to see any bearish cipher. Yep. Okay, I don't think it's on a daily time frame. Let me zoom in lower to see if I can spot what you are looking out for. Okay, you probably look out for this, if I'm not wrong. Let me just draw it in. Like this. Correct? Something like this. All right, but this is not accurate, okay, because for cipher pattern, your B point cannot exceed 61.8. Okay, so you can see if I pull in my fib, right, from this point over here, okay, my B point actually comes to 786, right? So when your B point retraces so deep towards 786, it's no longer a valid cipher pattern, okay? Because cipher pattern, the valid area is actually between 38.2, right, to about 61.8 only. So this pattern is actually not a valid one, okay? So you cannot trade this pattern. Okay, but if you are looking at shorting, if you are looking at shorting Aussie, okay, you need to look for another setup, right? Because that cipher pattern is actually not valid. Okay, so let me bring you to the idea that just now we identified this level, right? This potential buy area, okay, around that 127 extension. Okay, we identify this area 127. Okay, let me walk you through the thought process of whether we want to take this trade or not. Okay, in line with tomorrow's event for RBA. So we have this level that we're looking out for, right? I'm going to zoom out a bit on this H4. So I'm going to zoom out a little bit on daily to see if there's any key levels happening around here. Okay, in terms of daily, we don't see any significant in terms of support level happening in that area, right? So this is something to keep in mind on, right? So only based on H4, we only have a Fibonacci ratio of 127 happening over here. Okay, so now let's go and take a look at the events calendar. Okay, so tomorrow 11:30 will be crucial if we are trading the Aussie itself. Okay, so based on this, depending on tomorrow, all right, how we're gonna prepare it is, let me pull in my, let me pull in this week FXX report first. I'm gonna show you how we can prepare ourselves for that. Okay. So how you can prepare yourself in anticipation for the RBA, right, is to first look out at the economy of Aussie. How is it performing? Because depending on how the economic performance of Australia, right, we might see the RBA react to it. Okay, so we can see that over the last month, for the past 30 days, all right, Australia economy has been improving, right? But if you look at the overall, it's still in the red, right? It's still negative. But it has shown signs of improvement over the past 1 month, right? And if you look at the economy tracer over here, you can see that territory is still in the contraction phase, but in terms of improvement of the economy is already showing sign that it's improving. Okay, so that's what's showing that with all this, right, high chance that the RBA will not cut its interest rate for tomorrow. Okay, so you can keep that in mind. All right, so if RBA don't cut interest rate tomorrow, and if it provides a certain hawkish tone for their rate statement, okay, we might see the Aussie being supported. All right, and then we look at the COT report as well. Okay, you can scroll over. Okay, the first one to look out for here is Aussie COT report. You can see overall is in a long position. Okay, basically what it means is net long, right? Means more traders are actually holding on to long position than short position. That's why overall is in a positive territory. Okay, if you go into in-depth to look into Aussie itself, right, you can see that this week, all right, we have another 2,600 long positions added into the contract. All right, and if you look at the COT index, it's just about 80. All right, so it's not yet at all-time high. So there's still more room for it to move higher. All right, OI, open interest, has also shown an increment from last week. Right, from last week to this week, there's also an increase in open interest. So overall, all these things are still pointing towards slightly positive for the Aussie. All right, so our expectation over here is that RBA will not cut interest rate tomorrow, and if the overall rate statement tone is hawkish, right, basically is positive, we will look to actually long the Aussie dollar over here, right, at 7.545. But of course, if RBA cuts its interest rate, it's going to surprise the market. We will not buy Aussie anymore, right? We'll just wait for market to settle a little bit, and we're going to look for opportunities to short the Aussie if RBA cuts its interest rate. All right, so this is for Australia on the H4. So for those who are trading on a smaller time frame, if I go to H1 time frame, okay, the setup will be slightly different because what I'm seeing over here is that we have a bearish move down, all right, price retrace, and then followed by another bearish momentum downwards, right? So what I'm going to look for is to look for a retracement back up and potentially short the Aussie based on the H1 time frame, right? And of course, all this decision again hinges on tomorrow whether the RBA is going to cut its interest rate or not. Okay, so any decision, trade decision that we're going to make, we're going to wait for RBA decision tomorrow before we enter the market. Okay, so if you're looking at H1 time frame, this level will be the key level, 61.8 Fibonacci retracement at 7,650. Okay, so if price retraces higher back up towards this level, I'll be looking for an opportunity to short the Aussie. Okay, so this again depends on tomorrow. If RBA is dovish, right, and price still continue rallying, we'll be looking for an opportunity to short the market up here. Okay, let's look at RSI. Nothing much in terms of RSI itself. Okay, we do have a minor, very small divergence up here. Okay, any other questions or pairs that you want me to walk through? All good? Okay, okay. So before we end off today's session, just walk you through one last thing on looking at dollar index. All right, because JT shared a little bit during this week session, fundamental session itself. Just like to point out how by looking at correlation in the market, all right, is super important. All right, and I want to walk you through how sometimes market tends to align everything for you. Okay, let me just pull out my relevant chart and I can walk you through that process. Okay. Okay, this is actually dollar index on the daily time frame. All right, I want to just show you how everything lines up pretty nicely. Okay, for those who are interested on all this overall, broader perspective of the market, you can go over to our blog section. Every week we do publish this kind of overall market on a higher time frame on the daily time frame. We share with you the overall market perspective. Right. So if you are interested, you can go over to our blog to actually look for it. Okay, I want to walk you through, how things come into alignment. All right, it falls in very nicely. All right, and sometimes this might eventually turn into some form of like conspiracy theory. Whether is really so coincidence, or is it that people are actually all planned out and such, right? So if you still recall last Friday, right, we were in the group, we were all talking about this this dollar yen setup, right? About this dollar yen bearish divergence. Right. So what I want to share with you is that if you look at the dollar index, right, since the mid of 2016 this year, around May period, right, this bullish channel has been respected super nicely, right? What I mean is that this bullish channel price has been respecting this bullish channel all the way since May. All right, and as of last Friday, you can see that it actually tests the top of it. Okay, and so coincidentally, all right, we do have the dollar yen forming this top as well. All right, and coincidentally, we also have FBI opening up a case on Hillary that pushes the dollar weaker. Okay, so you can see, in terms of correlation, dollar index is at this bullish channel top. Okay, dollar yen is forming a divergence, and then what the market needs was a sentiment kick. All right, and price actually fall after that. Okay, so what I want to share with you is correlation in the market is important to take note of as well. All right, so as of now, if dollar index is to continue following this bullish channel, we can expect the next support coming in at about 97.50. All right, and if it continues to fall lower, the lower part of the bullish channel is about around 96.50. Okay, so keep in mind that this week itself for dollar, we have FOMC meeting on Thursday, all right, followed by NFP on Friday, and next week we have the US election, right? So there are a lot of things that's going to move this dollar, whether it's going to break this bullish channel upwards, or is it going to respect it and follow through, that means going down first before going up. We never know. Right, but this kind of correlation is very important because the dollar index is going to drive all your major currencies itself. All right, very similar if you look into, let's say, oil market. Okay, I think my oil market is in another watch list under commodities. All right, so just a quick sharing with you in terms of market correlation, why you need to take note of those as well. Correlation we'll look at for oil. All right, we'll be looking at dollar Canadian. Okay, let my com load up a little bit. It's a bit slow right now. Okay, so if you look at crude oil, okay, Okay, it's also very interesting. All right, what we have on crude oil daily time frame. All right, we do have. Oops. Okay, my com is really lagging. All right, but no worries. All right, let's go through oil, the last one that we walk through if you don't have any more questions. So if you look at this chart, all right, so what's happening for oil is that we do have this triangle forming, right? And price recently broke above it, but it tests a previous high resistance, right? And then it starts falling through, right? What we have on the daily time frame, we have a divergence in RSI as well. All right, and what we are expecting now is price, this bearish momentum, price is going to come back down all the way towards around 46 area, right, before it starts climbing up again. All right, and if you take note of oil, what's happening in the news recently is whether OPEC is going to, restrict their output on oil. So that is going to impact this. Okay, so depending on whether that deal is going to work through or not, it's definitely going to impact your oil market. And we don't actively trade the oil commodity itself, right? But we look at oil to determine how we want to trade dollar Canadian. Okay, because when oil prices rally, there's a tendency that your Canadian dollar will also rally. Okay, and what you need to take note of Aussie Canadian, all right, this one, if you look at higher time frame, it becomes very clear what's happening over here. Okay, you can see this huge divergence happening. All right, price continues to climb higher bit by bit, but our RSI is actually showing some form of huge divergence over here as well. Okay, so when price eventually drop, right, so for those who are trading normal, those usual price pattern, this is actually a wedge. Okay, so if this drop confirms, all right, this is going to be a significant drop. Okay, the next level that price can eventually fall towards is around this 1.307, all right, or 306, around this area. So this is a huge drop because that's more than about 300 pips. Okay, so the only thing that left questioning here is what is going to be the catalyst, what is going to be the main driver, all right, to drop the dollar CAD all the way back down here. Okay, one, it can be US decide not to raise rate. Okay, that caused a sell-off. Second, NFP data comes in very bad. Okay, that's going to drive another sell-off. Next week, election. Okay, we'll never know who's going to win, but it might cause that be the catalyst of the dollar sell-off as well. Okay, and for oil, all right, right, what is going to drive the oil and thus drive the Canadian? There are a few things as well. One is definitely your OPEC, right? If they decide to cut their output, your oil market is going to rally. That will cause Canadian dollar to rally as well. Second thing is if Russia, right, recently we heard a lot about Russia preparing for war and etc. If they did really start, show certain hint that war might start to kick off, that might rally, that might push your oil prices higher as well, and that might cause the rally in Canadian dollar. Okay, so right now with technical, all right, so I just want to walk you through the process that we have in our mind all the time. Is that technical, we are all seeing very nice potential setup, right? But what we are waiting for is we always ask ourselves, is it the right time to enter the market right now? Right? Does fundamental tell us that market is going to move? Does sentiment tell us that market is going to move? Okay, so as of now, we are waiting for the catalyst to push price lower and confirm that movement, and then you can see a huge, nice drop towards 1.3065. Okay, that's about 400 pips. Okay, so that's the last one that I want to share with you guys. But before that, all right, since I did this checklist earlier today, I'll just quickly bring this up to share with you guys. All right, and I'll drop this link for you guys to copy as well. All right, so this is a simple trading plan checklist. Again, nothing fanciful, but it's to help you to do a quick check as to whether you want to take certain trades. All right, so the first question you need to ask yourself, all right, is what is the current market phase? All right, what is the current market situation? Okay, is it trending or is it ranging? Okay, so you can easily check off this. Then the next question to ask is market sentiment. Who is in control? Are the bulls in control or the bears in control? Okay, so this one, if let's say you are trading dollar yen, all right, so you can ask yourself, is the bulls in control or the bears in control? Okay, then the next question after that you need to ask yourself is the engagement rules. All right, so according to your trading plan, is there a potential setup? All right, so this is where your trading plan comes in. All right, just now we discussed the importance of trading plan. That's where your trading plan comes in. This is where the next question comes. All right, is there a clear reason or reasons for me to take the trade now? Right, so when I mean now means you do not want to enter a trade and then you need to wait for maybe 2 weeks before your trade turns profitable. You do not want to do that. Right, so you want to time your entry such that when you take a trade, it gets resolved within the next week or within the few days, next few days itself. Okay, because you do not want your capital to be locked up in the trade for too long. Right, so you need to ask yourself, is there any clear reasons to take the particular trade? Okay, so these reasons can come from, let's say, fundamental forces. It can come from sentiment forces itself. Okay, then the next thing you want to check over here is there any major or significant news release coming up that is going to impact the trade? Okay, so just now, today earlier at 8:30, we do have a US news. All right, so that's why I check yes, and I do not want to enter in my dollar yen trade first because we have this significant news coming in. Okay, then next you need to ask yourself, where should I get out if my trade don't go according to plan? So you need to plan your exit strategy. Okay, so for example, if let's say you now have a dollar yen short, okay, and the news came in positive, right? Over here, you need to plan and tell yourself that, okay, if later on 8:30 the news came in positive, I'm going to exit that trade. Okay, so this is your exit strategy. It's important that you need to have that. Now, of course, risk management comes into play as well. Okay, you need to check whether this trade that you're going to take, are you risking too much? All right, so the question here is, am I risking less than 5 times leverage on my account? All right, this topic on risk management and leverage, I'll talk about it in the next webinar because we won't have time to cover that. Right, and of course, the last question is psychologically and whether you have the conviction and confidence to take the trade. Are you confident in taking this trade based on all the answers that you have provided on top? All right, so then if you take yes, that means yes, you are good to go. If it's no, then you just want to avoid taking the particular trade. All right, so I'm going to drop you this file in after once I upload onto Dropbox. I'll drop you that link to download that file as well. All right, so that's it for today's session. All right, basically we shared a little bit about the importance of trading plan. I'll walk you through some of our thought process. Before we end off, any other last questions that you guys have? All good? Okay, if it's all good, we shall end the webinar over here today. All right, again, this is recorded for those who are under the... So this is recorded, and then if you want to recap, all right, certain portion that we mentioned today, you can always go back to the website to check out the recordings as well. All right, so other than that, just now, okay, one last question. JT mentioned yen is bullish as well as dollar. Okay, Esther, just to clarify, right? JT mentioned that the economic performance of yen is bullish, right? But you need to take note that Japanese yen are not driven by fundamental, right? Most of the time, Japanese yen is driven by sentiment. When we mean sentiment, means risk on and risk off environment. All right, so that one you need to take note of. All right, so basically yen is going to be driven by risk on, risk off, and there are certain things that will affect whether the market risk environment is or risk on and risk off. The most simple one is in terms of financial certainty, meaning if the stock market crash, your Japanese yen tends to strengthen. Right, so that's a very simple correlation over there. All right, so JT did mention the economic performance we are seeing there is strong. All right, but you need to take note that Japanese yen most of the time is driven by sentiment and not fundamental. All right, all good? Okay, so with that, we'll talk to you next week itself. All right, again, if you have any questions, either email us or drop me a WhatsApp message. All right, so with that, manage your risks this week because it's very significant. A lot of key events is happening. All right, if you want, all right, and if you're a very conservative kind of trader, best is not to trade it. Just monitor the market. All right, get some experience as to how this event is going to affect the market. All right, the most important thing is always protect your capital first. All right, do not be too eager to profit from the market itself. All right, so with that, I'll talk to you guys next week itself. All right, and last thing is, if you haven't signed up for the US election webinar, we're gonna have it this Thursday. Right, basically we'll talk about the US election in particular, what is going to happen if Donald Trump wins, what is going to happen if Hillary wins, what you need to monitor in the market. All right, do take note of that. All right, so if you're interested to find out more, we have another free webinar on Thursday. All right, we'll talk about the US election. All right, for the link, Esther, I'll drop it in the WhatsApp. All right, because I haven't uploaded into Dropbox. Once I upload into Dropbox, I'll drop it into a WhatsApp group itself. Okay, so I'll see you guys next week itself.